Hi gang, so I'm going to do a debrief on Company G and Company H in this video to tell you how we did and what we need to look for as we start to try to figure out how we're doing. So first I'll take Company G. If you'll recall, that's the company that's running the differentiation strategy, or that was the intended strategy. So I want to look at the results and see how I did. If you'll notice, both Company G and Company H went down by 1 point. That's not surprising. You guys all came up and, remember Newton's third law of thermodynamics that every action has an equal and opposite reaction. So it's not surprising that you nibbled away a little bit of my lead there. Okay, so I'm going to take a look at Company G, and I want to take a look at the EPS, ROE, and stock price. Okay, Company G had, again, the best earnings per share in the industry. Remember, earnings per share are a weighted average for the entire simulation, and 2 years in a row means that the game-to-date score is going to be as high as it possibly can be. Return on equity is also a weighted average for the entire simulation. Stock price is the last year only. Okay, so Company G has the highest stock price. Credit rating, like stock price, is only in the last year. Company G's got an A- credit rating. The expectation's a B+. So the investors' expectations, we met it, but we didn't exceed it enough to get the full 24 points. Image rating, the investors' expectation is 72, and we got 75 on that. And corporate social responsibility, we don't worry about that, but in year 9, those corporate responsibility awards will come out for exemplary corporate citizenship. So you should be working on that if you have, like me, a differentiation strategy and your intention is to put money into corporate social responsibility to make up for limited market share. Okay. For bonus point awards, Company G missed revenue projections by 1.9%, but missed EPS by 5.3%. Therefore did not get the Bullseye Award this year. Okay. Leapfrog Award, congratulations to Team D, plus 54 points. So good job there. Okay. Industry overview, prices went up by 15.7%. And keeping in mind the law of supply and demand, because prices went up 15.7%, demand went down. That didn't actually go down. Let me rephrase that. Demand did not go down. What happened is demand was lower than forecast. Demand was still up 3.4%, but if you'll recall, it was expected to increase about 7% annually. Okay. On the drone, prices went up by 5%. Demand was 1.8% lower than forecast, but it was still up by 14.7%. So we've still got a growth industry on both accounts. Looking at the financial statistics, Team G, net sales revenues, second in the industry behind Team H. Team H is running, of course, the cost leadership strategy. Okay. Net profit is the best in the industry. Okay, $72 million. Balance sheet data, fixed assets, got 241 million. Just compare that to Team H, who has 377 million in fixed assets. That tells you that Team H is running the cost leadership strategy, because remember, you got to have a lot of fixed assets in order to go for volume. Okay. You always want to buy back stock, even if it means that you need to borrow money to do it, until you get into an equity problem. Nobody's in danger of that happening right now, okay? So shame on the 4 teams that did not buy back stock. Shame on the 4 teams that did not pay dividends. I would bet if I looked at the videos, which I will, and see who's actually paid attention, I bet you those 4 teams did not watch any of the Globus videos, so they're just kind of floundering, okay? But dividend payout ratio, I want to maintain about a 20% dividend payout ratio. That's my dividend policy, or my dividend, I guess we could call it a strategy if you wanted to, okay? Action capture camera benchmarks. My cost is $166.71. And as the differentiated provider, I'm really happy with that, because somebody's cost on the action capture camera are $243. I've got an $80 advantage over the company that's costing $244 to build that. And if you'll see, I've got 300 stations installed into my 300 station facility. Somebody is not paying attention. Lots of somebodies are not paying attention because you should never have a hole in your factory. Okay, let's see. My operating profit is above average, best in industry in Asia Pacific, best in industry in Latin America. My warranty claim rate is just about average, even though I think I've got the best camera warranty in the industry. I think it's in good shape, okay? Looking at the drone, my cost is $1031. That's not the highest in the industry, and I'm very satisfied with that because I do have the best drone in the industry. Again, I've got 110 workstations installed in 110 spaces. Okay, I've got best in industry operating profits in North America, Europe, Africa, slightly less than best in Asia Pacific, and still above average in Latin America. My operating profits are all okay. My warranty claim rate is above average, but that's okay. Let me expose you to some other reports that you can take a look at. Okay, for your company operating reports, something that's very important is your assembly and facility operations, because this will tell you how the cost of your product breaks down. Okay, you see I've got 300 installed workstations, 300 spaces, 110 workstations, 110 spaces. The question is, how much did I use? So I used 278 of those workstations. So that's roughly 92.67%. Okay, and over here I used 106, so that's about 97% of my workstation were used. Remember, in your factory, go back to the movie, The Goal. You want to have some slack in your assembly facility, because if you don't, you're going to definitely have bottlenecks. And arguably, I may not have enough slack there, okay? All right, so then you would probably want to look next at your competitive efforts. Company G, I'm shooting for the differentiation strategy. I am the differentiated provider. I did not anticipate that you guys were going to go up on price that much. So there's definitely room for a price increase for me for next year. And that applies to both of my products. You got competitors at $1,200 selling a very poor quality drone. I'm at $1,624. So market share, 13.7%, 12.9%. Of course, you want to look at all of your geographies. Okay, market share 13.9%, market share 12%. In Asia, market share 10.9%, market share 10.7%. Latin America, market share 10.4%, 10.8%. That really doesn't worry me a tremendous amount, because we do know that those markets are a little more price sensitive than other markets. And also we know that those markets are not as developed, okay? So looking at this strategy map here, I'm Team G here, and there's a strategy book that I would probably expose you to if I was meeting with you face to face. I've got a copy of it in my office. It's called Blue Ocean Strategy, Blue Ocean. That's what you really want to have. You want to be out there in the vast ocean with nobody on the horizon. And you can particularly see that Team G on the drone is out there. Team H is definitely out there. That's the cost leadership strategy, definitely on the camera, okay? All right, so that's kind of the debrief for Company G. I'm going to do a debrief for Company H next.